Hi, it's Harry. Well, the Bank of Canada this morning has redu- basically reduced our overnight rate by 1/4% again. They've taken the tack that inflation is in control, but the economy could potentially be at risk with the tariffs and not unexpected, they've reduced the overnight rate by 1/4%, while inflation still stays in check. That may change later on once the impact of all these tariffs start to be felt. We don't see it on the inflation state yet, but we do see it on the business environment where people have held off on buying, that being business owners or hiring. And we're starting to see that slowly percolate through the Canadian environment and the Calgary real estate as well. Why do I say that? Well, our inventory year over year is up 75% overall, but our sales, the what I'm projecting now for March is going to be down like 25%. Although we're still in a seller's market, but the cusp of being balanced, what we're dealing with is that it's not inventory is the issue, is a lack of buyers. As we know, big ticket items are the first ones that slow right down when in the face of uncertainty. And obviously, these tariffs have created a lot of uncertainty. But this also creates a buying opportunity for those in the civil service, in the public sectors, or where you have sufficient funds in your, whether your business or your workplace are stable. Because what I've seen, I've warned this could happen, but I didn't think it would happen so quickly. And as always, when it happens, you're playing catch up ball. The average overall housing price for Calgary has jumped from the previous month at 612 to 650. So we've seen basically an 8% increase in the market. And people have decided, okay, there's uncertainty, but I'm well financed or I have a stable job that I'm willing to take the chance. Because the idea is that after about a year, the gamble is things will return to normal to some degree. So, and then the pricing will go up. So they're buying ahead of that. They're willing to take that chance. It's the old adage of buying low, selling high, right? And when the market decides that if you're not already in there, you're not one of those involved in the buying, you may be left behind. And this is where I'm not sure whether folks will be left behind because we haven't seen the full impact of the tariffs yet. So we'll see how this all unravels. But if you're a buyer, I suggest if you feel like you're a property that you really want, you may want to do the deal. The sellers, if you're forced to sell, close it as soon as possible because as this uncertainty drags on, it's not positive. It tends to be more negative. However, as I said, the market has moved in the last couple of weeks. Even the detached market in Calgary right now, which has been hovering around 800,000, has jumped to 860. So what we've seen is like that 8% bump, immediate jump. We knew this spring market would be there. I thought it'd be muted, so our pricing wouldn't have jumped that quickly. But apparently people are willing to take the chance. And what I've found, the devil is in the details. I had a quick drill down into the detached market, and what I've seen is that literally there's been a 10% increase in buyers buying homes over 800 grand. So what that means is those that are well heeled, well financially supported are starting to close their deals and trying to lock in some lower pricing, expecting better days ahead. Because in real estate, you're not in there to flip it unless you're a flipper where you buy, you gut it, and you sell it. This is more, I'm going to buy it. It's going to be my place of residence. And in 5 years, I'll see the bump up that I should expect. And people are starting to enter that market because overall, we still have a huge net migration into Alberta. And we're dealing with what was a seller's market, still is to some degree. We're starting to approach balance, and all this is artificial, caused by our friend down south causing a lot of world friction. And the question is, how long will that last? And what are its true impacts? We haven't seen the inflationary impact yet on all these things, and we haven't really seen the job loss yet. So the Bank of Canada has decided to drop it a quarter point, assuming there will be job loss, and that's not unreasonable. The question is how much inflation we will see. I'm hoping there won't be too much housing inflation in the sense that materials, a lot of our materials are wood structures or gyprock, and I'm hoping that most of it can be taken from the Canadian environment, so we won't see that bump up. What we might see is the labor bump up because folks are trying to fight inflation. They've been doing that for a few years now, and so we'll see how this all unravels. Hopefully, this gives you some information. If you're buying, good time to buy. Buy sooner rather than later now because the market's moved on you. And I don't know whether it'll continue moving. If you're selling, try to close before any more bad news hits the market. Otherwise, have a great weekend. Hope to see you at my open house this weekend. Otherwise, have a great day.